Hi everyone, welcome to Odoo 16 accounting webinar. As you know, this year Odoo released version 16 for our accounting application with enhanced features. Odoo accounting module is designed to make our work process more productive and it automates the work of our accountant, as well as we'll be able to track the company cash flow. So the main agenda behind this webinar is to literate our end users and our public on Odoo accounting application. And at the end of the session, we'll be having a Q&A session. So drop your questions in the chat box. So let's get started. So this is my accounting overview where you can find all the modules, especially the accounting module. So we'll go to the accounting module. So this is an overview where you can find the journals, customer invoices, vendor bills, miscellaneous journals, bank journal and cash and all. Also, you will be having a tab over here where you can define your accounting periods, bank account, taxes and chart of accounts. So basically before going to this, as an initial step, we'll be having a feature that is localization, physical localization. For each country, we'll be having different taxes, different chart of accounts, physical positions according to the country we choose in. So for our chart of accounts, we'll be having, so these are the chart of accounts already there in our database, where we can create new chart of account and you can just click on the create button where you can create. I'll be creating one chart of account and you can provide the account name as a just account. Then you can choose the account type. So here you can see the chart of account types. Those come under the balance sheet or assets, liability and equity. And under the profit and loss, you'll be able to see the income, expense and other accounts, that is off balance sheet and all. So I'll be providing the account type as income. Okay, and you can save. So once you click on the setup option, you'll be having more configuration where you can see already added the code and test account name and the type and the default tags. You can just remove this. And also you'll be able to add tags and allow journals for this chart of account. Also currency for the chart of account can be provided. If this account is involved in the reconciliation process, you can mark it as allow reconciliation, and you can also mark it as deprecated whenever you want to deactivate this account. So when you enable this feature, that is when you mark this account as deprecated, no longer it will be in use. It will be an inactive stage. So let's save. Okay. Also, you'll be able to import the chart of accounts from here. That is, you can add CSV as well as your Excel sheet. You can import the document or the data, that is a chart of accounts, to your database. And in the configuration settings, here you can see an accounting import section where you can import the full history. That is, this will lead you to the accounting import gate where you can import the contacts, then chart of accounts as well as journal items. So once you have added or imported your contacts, chart of accounts and journal items, you can see the respective chart of accounts, contacts and journal items in your database as well. So this is about the chart of accounts. So basically this chart of accounts are all the accounts that we will use in our company. Then we will have another configuration, that is taxes. So you can see some taxes over here. This is tax 15, which is sales tax and purchase tax. So let's create a tax. So click on create icon and I'll be adding a tax with tax name, says 10%. Okay, here you can add the tax type, whether it is sales tax or purchase tax. And tax code can be added whether you apply it on goods or services. Here you will be able to add the percentage amount because the tax computation provided over here is percentage of price. The tax computation can be either group of taxes, fixed, or percentage of price tax included, or even we can make use of the Python code to configure chart of the taxes. So 10% of price will be considered as tax. And under the definition, you will be having the distribution of invoices as well as the credit notes. Here we'll be able to add the accounts. So tax account can be added. Okay, this is for credit notes as well. Let's say, so this is about the tax computation percentage of price. I can even make group of taxes, for example, VAT 10% plus cess 10%. So this is a group of tax where it will apply both tax in the computation. So it is also sales tax, and you can provide this as group of taxes. So you can see the respective changes under the definition where you can add multiple taxes. So cess is one tax and we have to add the second tax. So we can create that is VAT 10%, and here amount is provided as 10%. Tax account can be added. And let's say, so this is basically a tax with including two taxes, that is 10% cess as well as 10% VAT. So we'll be able to configure sales tax as well as purchase taxes and taxes. Then we'll be having journals. Journals are actually the accounting records where you will be having different journals can be made use of in our Odoo database. So basically Odoo provides 5 type of journals. One is sales, purchase, cash, bank and miscellaneous. So let's first take the sales journal. So sales journal are used to record all the transactions that are related to sales. That is customer invoice is one of the example. And under the journal entries, you can add the default income account. So if you are using this particular journal, it will take this income account, that is a product sale. And if you don't want to share same shortcode or same sequence for both your invoices and credit note, you can enable this. And the shortcode for this the journal entries that are generated under this particular journal can be provided over here as INV. So those journal entries are created from customer invoices. Will have a sequence started with INV. Also, we'll be able to provide the currency as well. Then under advanced settings, we'll be having control access and payment communication options where you can add allowed accounts, and also you can log the posted entries. So once you enable this, that is log posted entries with hash, will not be able to reverse or edit the journal entry that is generated under the customer invoices. Then we will have the communication type, which is either based on invoice or based on the customer. And also even we can schedule activity. So once a journal entry has been generated under the customer invoice journal, automatically and schedule activity will be applied. You can add that, maybe it's and follow Let's create one activity from here, and it can be applied to default user. Okay. So let's save. Then we'll move to next journal, which is purchase journal. All the purchase related transactions will be recorded under the purchase type journal, and here you can add the accounting information like expenses, that is the default expense account. So when we use this journal entry, this expense account will be taken into account, and also we'll be having a dedicated credit note sequence in order to avoid the same sequence for your bill and your reverse bill. So we'll be having the access control, and we'll be able to log the posted entries using log posted entries with hash. Then our next journal is cash. Usually the cash and bank configuration will be the same. Similarly, the sales and purchase configuration will be the same. So for cash, the type you can see it's already updated as cash type. So all the cash transaction will be recorded under cash journal, and bank transactions will be recorded under the bank journal. And under the journal entries information, we'll be having some accounting information where we can add the cash account and the bank suspense account and the profit and loss accounts as well. So the bank suspense account will be used, it's actually a temporary account where we will record all the transactions that are not reconciled. So that will be updated in the bank statement, the bank suspense account as we entered a cash statement. And we'll be having the short code over here. And the incoming payments, the payment method can be updated, as well as over here we can add our outstanding receipt account. Similarly, in the outgoing payments, here also we'll be having the different payment method can be added, and also outstanding payment account can be updated over here. Then under advanced settings, we can also add allowed accounts. So these accounts will be allowed while making the cash transactions using this journal. Then we will move to the bank journal. So when you look into the bank journal, you can see this configuration will be same. That is, you will be having an option to add the accounting information, that is the bank account, bank suspense account, short code, dedicated payment sequence as well. And also one more feature is over here, that is you'll be able to add the account number and bank feeds as well. So bank feeds defines how you import your statements, whether you import CMT, CSV, or FX or QF format of your statements, or whether you want to automatically synchronize with your bank. So that what it defines by the bank feed. And also under the incoming payments, we'll be having the payment method for incoming payment, and for outgoing payment, what are the payment methods you are using, that you can add over here. That is checks is added over here, that is for making vendor payment. We'll be having an option to add with checks, and for check we'll be able to add the manual numbering as well. So maybe we'll be able to add the starting number, that is when you try to add an outgoing payment using the check, there's a payment method check, the starting number of the check will be this one, that is the next check number you can provide over here. And also under advanced settings, you will be able to add the allowed accounts under this journal. Okay. Now we'll be moving to miscellaneous journal. So all the journal entries other than sales, purchase, cash and bank is recorded under the miscellaneous, including our stock journal, exchange differences, etc. Here also you will be able to add the accounting information and its short code, and also under the control access you will be able to add the allowed accounts, and you can also log the posted entries if you enable the feature. So this is for cash basis, which is a miscellaneous journal. And also you can see for exchange difference and inventory valuation, they are come under the miscellaneous journal type. Then we'll be having another feature, that is currency. So Odoo supports multi-currency, and here you can see all the currencies. That is 167 currencies are Odoo supported. Out of this, 3 are in active stage, and you can even see the last update date and the current rate of each of the currency. For taken to US dollar, this is a company currency, which is USD, and for Indian rupee, you can see the currency unit and subunit, as well as for this particular date, the unit per USD is 39.22. So as you go to the configuration settings, you can see the currency over here. That is under currency, you can see main currency. That is, main currency of the company is USD. Since the company, my company San Francisco, is whose country is added as United States. Therefore, according to the country, the currency will be updated. That is why the main currency is in USD. And also you'll be able to update the automatic currency rate with the help of some service providers. You can see over here. So this we'll discuss in later. Then we'll move to another option, that is physical positions. So physical positions are actually used to map our taxes as well as account. That is, account mapping and tax mapping are included in the physical position. So I'll be creating one physical position, that is for United Kingdom. And if you want to detect the physical position automatically as per the country of our customer or partner, we can enable this detect automatically, and also you'll be able to add the country over here. So whenever a customer or a partner try to purchase or make an invoice in our Odoo database, and if its country is United Kingdom, whatever the tax mapping we provided, that will be automatically applied. So here tax mapping can be provided as our tax 15% sales. So if I applied this taxes on my product, and if the customer is particularly from United Kingdom, it will take the VAT 10% sales. So let's say, similarly, we'll be able to account mapping, that is product sales to be recorded in maybe another income account like other income. Okay, so we'll be able to map like this. That is, account on product will be product sales, but on transaction for a particular customer from the country we have provided over here, that is United Kingdom. So even though the product sale is the actual income account is added, it will be accounted into other income. That is, this account will be used instead of product sales. Now we'll be having another feature, that is payment terms. So payment terms defines how long a customer can make payment, that is after that particular period, the payment become due. So maybe I'll be providing as 10 days. So 10 days is a payment term. So here we'll be able to provide the description. This will be appear in the invoice. So in to display the definition of your payment term on invoice, you can enable this feature, and I'll be adding that is payment has to be done within 10 days. Okay, you can also specify the company. So I'm providing San Francisco. So this payment term will be restricted to this company only. And here we can able to add the due type, that is 10 days. Here we can add 10 days, and also we'll be having an option of discount, providing discount. This is what we call early payment discount. This is a new feature in Odoo 16. So if the customer make payment within 10 days, he will get 1% discount. So I can add it over here, that will be automatically taken. So you can see the definition over here. For example, for any invoice of 100 dated on current day, the due date and amount will be, that is only with one installment of $100, customer need to only make payment 99, that is 1% will be discounted. So I'll be saving this. Similarly, we'll be able to add more payment terms according to our usage. Okay. Now let's see how these configurations are using in various operations. So first we have discussed the chart of account. So let's go to our product configuration and customers. So in our product configuration, so just open this acoustic block screen where you can find the general information of the product and its attribute details, variant, purchase, then sales related options and inventory related options. And under accounting, here actually we'll add our income account and expense account. That is, under receivables and payables, we'll be adding this income account and expense account. So whenever I sell this product to one of my customer, it will record the income generator under the income account what we have provided over here. So I'll be providing the income account product sales over here and expense account over here. So once I make an invoice, this product sales will be record the income, and if I'm making a bill for my vendor, that is if I'm purchasing this product from my vendor and a bill is created, so the expense generator will be recorded under expenses. Okay, so let's save. One more option is the under the product category also will be able to add the income account and expense account. So we have seen the income account is recorded under the journals, under the product category as well as in the product. So if I have added the account, that is the income account and expense account in the product, it will be taken, it has a more prioritized one. So it will be taken initially, else that is if I'm not added in the product, it will take the income account and expense account in the product category. Otherwise, it will take into the income account or expense account that we define in the journal. So here we have added the income and expense account under the accounting tab, and also under partner details. For example, I'll be taking this Deco Addict. So for Deco Addict, here you can see the details of Deco Addict, that is the contact information of that person, different addresses, and sales and purchase related details, that is who are the salesperson and the payment term, default payment term for sales, and default payment term, payment method for purchase as well. And under the accounting tab, here we'll be able to add other chart of accounts like the account receivable and account payable. So whatever the amount we have to receive from the customer will be recorded to the account receivable, and account payable is the account where we will record whatever amount we have to pay to our vendor. So that is account payable. And for receivable, its type should be receivable, and for account payable, its type should be payable. Okay. So here we apply the chart of accounts, and for product as well, let's go to product again, and also here, yeah, here we'll be able to add the product price and also the customer tax. So I'll be provided it as tax 15%. So here you can see the tax included price for the customer, that if I'm selling this product to customer, this tax will be taken, as well as under purchase we can see the vendor tax. So if I'm trying to purchase and make a bill for the from the vendor, this tax will be taken. So purchase tax 15% is added in the product, as well as customer tax 15% is added inside the product. Also we'll be able to add default taxes over here, that is under this configuration settings, under taxes section we'll be having default taxes, where we can add the default sales tax and purchase tax. So if we not added any taxes inside the product, this tax, that is this default sales tax and purchase tax will be taken. Okay. Now let's see the other features like our journals, currencies, and the payment terms are working. So for that we'll be generate an invoice. So for invoice management under customer, we'll be able to create invoices, credit notes, payments, even follow-up report as well. So just go to invoices. Okay, here we can see all the created invoices whose status is cancelled right now. So I'll be creating an invoice. Just click on the create option and add customer as Azure, and the invoice date can be added, today's date, and the payment reference can be also added, and this is a payment term where I can add 10 days. So customer have to make payment within 10 days, otherwise it will become due. And the journal. So all the sales related transactions will be recorded in the sales journal. So this is a sales journal, customer invoices we have created, and the currency. I'll be adding currency as USD because my customer is from United States. So I'll be making invoices in USD. And let's add the product, acoustic block screen. Okay, so here you can see the account taken is product sales, and the quantity is 1, unit price is $295, and the tax is 15% that we have added inside the product have been taken, and also the subtotal which is 295, and here you can see the untaxed amount 295, and $44.25 is 15% tax, and total of 339.25. So let's confirm. Okay, so we can see a follow activity has been scheduled. This is what we have already added inside our journal. That is, once a journal entry has been generated under this customer invoice journal, an activity has been planned. That is assigned to Michelle admin, and it's due in 10 days, and it is for follow-up. That is after 15 days, sorry, after 10 days we have to follow this if customer doesn't make payment. Now under journal items, we'll be able to see all the journal items. That is, product sales is an income account, or as income increases it is credited, and here the tax received, that is 15% tax is recorded to the tax account, that is tax receipt, which is also credited. And under account receivable, we can see the details, that is the amount to be received from our customer for this particular invoice, which is debited. That is, receivable is our asset type. For asset increases, it will be debited. Okay. Now, in the other info as well, you'll be having some other information. So we'll discuss. So it's already posted. So the next step is to make payment. So here we'll be make use of our chart of accounts and the invoice as well. The next step is to make payment. So we can also have the option to send and print. So as I'm clicking on the send and print, it will be send the invoice to the customer. So this will be the document layout where you can change the layout to box or bold or striped one, and you can choose any one of this, and also the font type. Even you can change the logo appear over here, and the color and the layout background. Also you'll be able to add the tagline and the company details that will be appear along with the logo and the footer information and the page format. Okay, you can also download the page preview. So I'm saving this. So this will be the document layout that will be sent to the customer. Okay, so let's save the. Okay, so here you can see the print and email option is already enabled. So this will be defining in the configuration settings of accounting module, and the recipient, that is a Azure India, it will be automatically taken, and the subject and the content of our mail, as well as here we can see and template that is used, and this is an invoice which is attached. So once you click on the send and print, this will be, that is, this mail will be sent to your customer, that is attached along with the invoices. Okay, then let's go to configuration settings. Under the custom invoice, you can see that is a default sending option. That is, here we have enabled the print and send email option. That is, this option will be auto selected when we click on the send and print option on the invoices. Now we'll move back to our invoices. Okay, so here you can see the invoice number 5 and the invoice date, that is due in 10 days. A follow-up activity has been scheduled, and tax excluded amount and the tax included amount and the total amount in currency as well. And here you can see it is in posted stage. And also you'll be having different options, that is you can enable, that is if amount due or the payment status is already there and the status is there. So here you can see the amount in due will be updated. Then the next step is making payment. So once it is confirmed, that is once the invoice is sent to them and the customer make payment, you can click on the register payment option, and you can add the journal. So here you can see the early payment discount is applied. Since we use the payment method 10 days, and if customer is making payment within that 10 day, you'll get 1% discount. So that discount, you can see the payment difference, which is, it should be, payment difference is 3.39 and the amount is 335.86 and it should be marked as fully paid. So let's create the payment. So you can see it is goes to in payment state and the due amount is 0 right now. Okay, so right now the payment is paid, that is it is paid. So under the payments, you can see the payment that have been received from our customer. Okay, so the details will be over here, and you can see the journal entry. So the journal entry, you can see that is the tax amount on tax account and the cash difference loss. That is the discount for early payment is actually a loss for the company. So cash discount, it will be added to cash discount loss that will be added in our journal. That is a profit or loss account that we have defined inside our journal. And the account receivable and outstanding receipt. So out here the outstanding receipt is debited and the account receivable is credited. Previously account receivable is debited. Now we'll be moving our account receivable to outstanding payment. So actually this outstanding payment will be an temporary account that is used to record the unreconciled entries, and only after reconciling it will be moved to the bank account. So it's an bank journal. So in the dashboard, you can see that is in outstanding payment, it is 335.86. That is unreconciled amounts can be seen over here. Once this is reconciled with the bank statement, then only it will be moved to the GL. Then let's go to the configuration settings, where you can see a default account section. Okay, so default account sections are the where you can see outstanding receipt account and outstanding payment account and a cash difference loss and gain account. So the difference at the time of early payment is moved to this cash difference loss account. If it is a gain, in any case, if it is a gain, that will be automatically taken to this particular account. So these are the default account that have involved in different process. So that is defined under the default account section, and here we will be having the exchange difference journal and gain account and loss account. So this account are used to record the loss or gain that is received when we make payment. That's when customer making payment in other currency or in another currency, where the exchange difference will be posted to this gain account or loss account. Now consider another method, like if customer is making some advance payment. So we'll be moving to customer payment, and for Deco, suppose Deco Addict is making $1,000 advance payment. So you can see the payment type is send and receive. So it is basically receive. There is an option internet transfer. So internet transfer is basically used to transfer amount between bank accounts. And here the payment type is receive money from our customer. So the customer has made an $1,000 advance payment on current date. So you can mention over here it is as advance payment. And the journal, the payment method and company account can be added. So as I confirm this, okay, you can see the journal entry over here, that is it is between the account receivable and outstanding payment. Okay, so let's see if this customer have an invoice. For example, Deco has an invoice with corner street. Okay, corner desk with price of 147, and the invoice date has been provided by today. Okay, so let's confirm this. So you can see over here, that is advance payment, there is an outstanding credit, and also over here you can see an outstanding credit for this customer that will be appear as a message over here. So when you click on this add option, that amount will be added and it will be goes into in payment method. This is one method where you can apply the amount that you have got from your customer. You can add it into invoice. So if I'm trying to duplicate this, okay, so So I'll be having an invoice, that is invoice number 7 with $147 payment. And when we go to this payment, that is 4,000, here we'll be having an option payment matching. So when I go to this, you can see that corresponding payment and the remaining payment that the customer have, and it can be matched. That is what we call payment matching. So we can choose this payment and click on the reconcile. So it will be reconciled. Also, we'll be able to see this details under the reconciliation. Okay, when you go to under reconciliation, the invoices and the payment details can be seen. There is a invoice and payment that we record in the Odoo database. So we can match the invoice with the payment. That is what we call payment matching. And we have one more reconciliation process, that is bank reconciliation. That is what we reconcile the receipt payment with our bank statement. Okay, so go to the invoices where Azure. Okay, so Azure have made this payment, or let's consider for Deco itself. That is, there is a payment for 147 for invoice number 7, and you can create the statement from here. When you go to reconcile, and from here you can create the label can be provided, that is statement can be created when you click on the create button, where you can add the date and the invoice number, the partner, and also amount. Okay, so let's say, okay, so this is a new form of our Odoo reconciliation process. This is it's also changed when it comes to Odoo 16. So when you chose this deco edit, that is 147, and you can see the payment as well, and you can validate. That is, the payment will be moved from the outstanding receipt to the bank. So let's validate and go to the invoices. Okay, so in the invoice, that particular payment, that 147 has to be moved to actually into paid stage. That is, 7 should be moved to paid stage. Let's check again. For, yeah, we have 853 is pending. Maybe in the customer invoice there is 6 and 7. Let's add again. So label has been provided, and deco 147 for 6 as well, and we'll be having one more, that is 47. Deco as a partner, 147 is the amount, statement amount, and statement is added. Okay, so when you click on this 6, you can see there is some outstanding payment. So you're gonna reconcile that payment with that particular invoice, as well as for this. Okay, let's validate So both are validated, and when you go to your invoices, yeah, it's actually not moved into payment status, it actually moved to paid status. And also over here you can see that outstanding payment that is changed to 894. That is, a payment is already reconciled. So that is, a payment will be moved from the outstanding receipt to our bank statement, our bank account. So we'll check the partner ledger or go to general ledger. Okay, yeah. Here you can see that amount 147 has been registered and the bank account, and for account receivable you can see that amount and outstanding receipt as well. So from the outstanding receipt it will be moved to the bank account. So as it increases, it is debited. Similarly, uh, we'll be having the vendor bill management where we can manage bills. Just as we created invoices, we can create bills for our vendors. For decor date, I'll be creating one bill. So you can add the bill date as well as the accounting date. So accounting date is the date at which this transaction have been recorded in the reports, and also the payment reference, the due date, and the recipient bank journal. So vendor bill is the journal that is used for the purchase journal, and here you can add old bill or purchase order. So bill for that purchase order or the product inside the old bill will be automatically populated over here. So you can add bill for customizable desk. If the price is 200, and you can see the default taxes taken over here, that is a purchase tax and the expense account we provided. So the total is 230, and under journal items you can see the journal items, the account affected, that is the expense account which is debited, and tax paid is in the account which is debited, as well as our account payable. Then we'll be having the other info where we can add the physical position info term, and there will be one option that is auto post. It can be applied as no or at date. So if I'm adding a date, and if I'm providing it to 10th, okay, so the accounting date is added to 10th, and I'll be added as a date. So you can see this particular bill will be automatically posted at this particular accounting date, that is 10th of December. And if it is a recurrence bill, what you can do is that you can add it as monthly. So it will generate bill and it posts monthly under the date you have provided over here. Then there is an option to check, that is, if the cashier is not sure about this bill, that is the data he provided in this bill, he can click on the to check option. So later a person that is was responsible for to check those details can filter the one to check, so we can see which are the bills to be checked, and he can recheck the details that has been provided over here, and he can if it is okay, that is the details applied in the bill is okay, he can mark it as checked, and he can post it. So the bill is posted. Then the similar option, that is we can make the payment to bill. Then we have the refund option and as well as credit option. So credit note is the option where if customer has returned any products, we have to refund to customer. So that is what we make credit note. Similarly, the refunds in the bill. So if I'm going to credit note, we'll be able to create a credit note. So the sequence which is reverse invoice, that is RINV, is taken as a sequence where we are using the same journal for invoices. And here we can make the product, that is create the credit note by adding the product and details. And let's confirm, and customer is required. Let's confirm. So this will be moved to posted stage, where you can see it is a negative, that is the total amount shown in negative, which means we have to make payment. And also we'll be able to create credit notes from the invoice itself. That is, from the invoice will be having this option, that is to add credit note. So it will generate a credit note under the credit notes. Now we'll be moving to vendor refund. So here we have already added a bill and the bill is paid. Okay, so let's try to reverse this. So we have the option credit note. So if I'm trying to click on the credit note, it should ask for reason. So reason can be applied, that is reason can be added, and we'll be having an option whether we are using the specific journal of that is whether the vendor bill or even there is any other uh, credit that is any other journal for reverse bill. And here we can either add the reversal date as specific date, so the date can be added, or the journal entry date itself. So let's click on the reverse option. So it will basically create a credit note. You can see a vendor credit note is generated, which is a reversal of a particular bill. That is, a bill number will be applied. Now here a date is removed and put it as auto post as no, and let's confirm. Okay, so this is posted, that is a reverse bill is posted. Now let's go to the refund. So you'll be able to see that refund over here, that is a reverse bill, where under the other info, under the journal items, you can see that accounts, that is a reversal, that is just a reversal journal entry of each of the ledger. That is, the expense account is debited, tax is debited, and account payable is credited. And here you can see the bill reference as the reversal of that particular bill, and the reason will be added. So it will be easy to understand that is a this reverse bill is generated for which bill and what is the reason. So these things will be, you can see from here itself. And also we'll be having the payments, where the payment details can be seen over here, and we'll be able to create new payment as well. Now we'll move to follow-up reports. So before going to follow-up reports, first we need to know how follow-up levels are generated. Actually, these follow-up reports are those reports in order to follow up our customer invoices if they don't make the payment within the payment term we define. So once the payment term has been expired, that is a bill or customer invoices expire, we have to send some follow-up reports. So different follow-up levels can be created, that is within 15 days. What should we do after 15 days? So there is a first reminder after 15 days. You can say remind 15 days after the due date. So what have to we do is that we have to send an email. Then the payment reminder template you can see over here, and it should be automatic and it should attach the invoices. Okay, so let's see how it works. So when we I'm just removing this automatic, so this will create a follow-up report under the follow-up reports. So before that, let's go to the customers, and for this registered customer, let's add one address. Okay, so in Odoo, again in version 16, we have a new feature, that is we'll be able to add the follow-up address. So the follow-up address, I'll be added a new follow-up address. That is, this is for example, checks. And here we'll be able to add an email ID. So whenever this follow-up mail is sent to the customer, this follow-up email will be taken. So I'll be adding a follow-up mail. Example.com. Let's say, okay, so a new address has been added, and let's say this contact, and create an invoice for this registered customer. So go to invoices and create for registered customer, and with the invoice date on maybe by 24, and the payment term has been provided as 26th itself. So it's already due, and a product has been added, that is 750. Let's see and confirm. So the invoice number is 8, and go back to invoice. So you can say it is due 11 days ago. So for 15 days, we'll be having that payment follow-up report has to be generated. So let me reset to. So this has been applied to 10, and 21 has been added. Okay, now let's go to invoice. So you can see it's due 16 days ago. So basically, not this one. Yeah, 16 days ago. That is, it has to be due 16 days ago itself. So a follow-up report has to be generated. So when I go to the customer follow-up report, you can see a follow-up report has been generated over here. And you can see which is in need of action and the due amount over here. When you open this, you can see that due amount and all. And once you click on the follow-up, it will send a follow-up email. And in the follow-up level, if I enable, that is here in the follow-up level for 15 days, if I click on, that is, if I check this box automatic, it will automatically send an email. So currently we'll be having that follow-up report where we have to manually send. So if I click on this follow-up, you can see that follow-up address has been added, and the mail will be sent to the customer as a follow-up report. So this is how we add the follow-up report or send a follow-up report to customers. Now we will move to the next tab, that is accounting, where you can find the journal entries. So when you go to journal entries, you can see the journal entries over here. This is filtered by miscellaneous. Then you can group it by journal. So you can see all the journal entries that has been generated in our Odoo database. So you can see the invoices and reverse invoices under the customer invoice journal. I'm unfolding this. So all the journals are unfolded, and under the bills, you can see the vendor bills. This is a miscellaneous one, and the bank transactions. So all the journal entries you will be able to see when you open this. So I'll be opening this invoice. So you'll be able to see the journal entries as well. And also in the three dots, we'll be having an options to check in order to add the partner reference company and to check field to our list view. Then we will have the journal items. All the items that come under different journal entries will be appear over here, which is an posted, and also you'll be able to group by journal. Then again I'll be group by journal entry. So you can see under customer invoices, these are the journal entries, and vendor bills, these are the journal entries, and you can unfold this so you can see all the journal items inside it. That is whatever the debit, credit, and the matching field. And also you can even add the currency, balance, and residual in currency, etc. So it will be appear in the list view as well. And here you can see a matching A1. So which means that is reconciled. This entry is reconciled. So it will, that is once it is matching has been completed, it will be recorded with the sequence. Then we'll have this automatic transfer option. So basically automatic transfer feature used to record or to transfer amount between two accounts. So for example, there is an expense for project innovation. So if I send monthly a particular percentage of amount to the account that is used for this project renovation. So we can add the period over here, that is the starting period and end period. So this is start from 2022. I'll be put it from December itself, from December 1st. So monthly it has to be that is the amount will be transferred from this origin account to this automated transfer has been happened to this destination account. So here I'll be adding our bank. Okay, so bank account has been added. From this, I'll be adding 10% to some expense, and 20% is moving to current asset account. Okay, so let's say, so before transferring, let's go to this account and we can see the balance of the account is 10,385. Okay, so while we activate this and compute the transfer, you can see one transfer has been generated. So here you can see that transfer, which is a miscellaneous operation, and that is 30% is taken from the bank and 10% is transferred to expense account, 20% is transferred to current asset account. So this is how this automatic transfer happen. And you can also mark this auto post option to a date. So this particular accounting date, that journal entry will be automatically posted. So you'll be able to add the automatic transfers. And when you go to the next feature, asset. So As we know, company purchases an asset which will be used for a long period of time. So the expense generated has to be distributed among those years that we are using this asset, as well as the depreciation has to be calculated. So in asset, we'll have three method of asset calculation. So as we click on the create option, we'll be having the asset option where depreciation method can be straight line, declining, or declining then straight line. So for example, if I have a car, if I'm purchasing a car for company purpose, and I'll be added $50,000 as its original value. So if it have any salvage value, you can also add the salvage value over here. So I'll be adding a 10,000 as a salvage value. So you can see the book value is deducted to 40,000, and the depreciation will be calculated on this 40,000. Okay. Otherwise, if the salvage value provided as 0, the book value of the product is 50,000 itself, and on this particular value the depreciation will be calculated. And if you have any asset model, you can add the asset model. So currently I will not be added any asset model. Then let's go to the depreciation method. So here we'll be having three depreciation method. First one is straight line. So I'll be put the duration as 5 years. So the depreciation will be calculated equally, that is distribution will be equally among the 5 years. And here the company can be added and depreciation account can be also provided, that is asset depreciation and as well as other expense account can be provided. So if I compute depreciation, we'll be having a depreciation board over here, and you can see the depreciation value, that is every year it will equally distribute that depreciation. So first year, that is by 2022, it is 10,000 and the cumulative depreciation is 10,000. So the depreciable value is 5,000 minus 10,000. Again for the next year, 10,000 has been deducted. So cumulative depreciation is previous year's depreciation plus current year's depreciation. So total 20,000. And here it is 40,000 minus 10,000 again 30,000. So it will go on like this. Now if we have the depreciation method as declining, there will be a declining factor. That is every year 30% of the depreciable value will be deducted. So if I am trying to compute with this declining method, you can see the depreciation. That is first it will calculate, that is 50,000 multiplied by 30%. So there will be 15,000. So 15,000 is the initial depreciation, and 50,000 minus 15,000, that is 35,000, is the next depreciable value. Again for the next year, 30% of the 35,000 will be deducted as depreciation. So again 10,500, that is 30% of 35,000 is 10,500 is the depreciation for the next month. So the cumulative depreciation can be seen as 15,000 plus 10,500 and the remaining depreciable value. So till like this, that is every year 30% of the depreciable value will be deducted. This is a declining method, and we will have declining then straight line. So let's compute. So this is a combination of declining and straight line, where it will start with declining, and once there is at a particular year, when the depreciation has been calculated, and if its depreciation goes below the straight line value, from that period it will calculate the straight line method. So here you can see from the third year as 30% of 24,500, which is less than 10,000. So from this year 10,000 will get deducted as a straight line. And also we'll be having one more computation based on no pro rata or constant period or based on days per period. So this computation is new in 16. Okay. Also, if we have any bills, we can able to add that bill. So based on the bill, even we can calculate the depreciation. For example, if I'm selecting this one, so you can see that is 30 is the amount. So you can see the amount will be taken to it. That is the original value and the book value. So as I'm creating the depreciation board, the depreciation will be calculated on this bill amount. Okay, so you can see the depreciation has been calculated. That is declining, then straight line. Okay, so this is a asset creation. So this is as I'm creating one by one, it will be inconvenient. So there is every time we are doing asset calculation manually. So that's an inconvenient method. So for that, we'll be having this asset model in order to automate this process. So we can set a asset model over here. For example, car model, and I'll be providing a straight line as a method and a duration 5 years and computation based on no pro rata, and the depreciation can be added as a depreciation and expenses. Let's say, so as we are going to the asset, we'll be able to use that asset model. Here we'll be able to use that asset model. So all the data we have been added to our asset model will be auto-populated. So instead of adding one by one, there is all adding all digits, will be able to add this asset over here. Okay. So this is how we use this asset for automation, and also we can add this fixed asset account in our purchase bill, so that the asset will be automatically calculated. Now we'll be moving to our deferred revenue. So deferred revenue is another feature where we will receive advance payment from our customer. Basically, it is a revenue for our company, but it's actually a liability. Since the service is not provided completely, it's a liability for the company. So, for example, there is a warranty for 5 years, and its original value is $1,000, and the acquisition date is today's date. And also, in order to automate, we can make use of the deferred revenue model. And also here you can see the revenue amount is 1,000. So on this revenue, we'll be creating the that is, we are computing the deferred revenue. So it is for 5 months. Instead of that, I'll be added to 5 years, and computation is based on per period or no pro rata. So if it is no pro rata, in the sense it will consider the start of the fiscal year, and if it is constant period, it will be based on pro rata date. That is, as the date we have provided, from this date onwards, the revenue has been calculating, that is deferred revenue is calculating. And based on days per period, that is, it will identify the depreciation, the revenue board based on the days per period. So I'll be providing no pro rata, so it will be consider the start of the fiscal year, and here we'll be able to provide the deferred revenue account and a revenue account as well. So the type of this deferred revenue is current liability. And also we can set the automation over here. So let's go back. Okay, and when you click on the compute revenue, you can see the revenue board where you can see the total amount is distributed among the 5 years from 2022 onwards 2026. The amount is distributed, and also you'll be able to take a related sales. For example, if you are taking this particular invoice, based on that the amount will be updated and the revenue board will be calculated on this value. Okay, so I'm just going to make an automation. Let us go to the revenue model where we can create a revenue model. For example, for the extended warranty, it's a number of recognition is for 5 years and the computation which is no pro rata. And here we'll be adding the revenue model. The revenue account and revenue account and the journal which is a miscellaneous journal. So let's save, and either we can add the model in the deferred revenue, that is over here. If you try to add this model, deferred revenue model over here, or you can go to deferred revenue model, deferred revenue. Okay, then let's go to the chart of account of and search for deferred revenue, where you can add under the automation, you can add the revenue model over here, extended warranty. So this will help you to generate an extended warranty for an payment. So let's create an invoice. Suppose you have received from Deco. Suppose you have received warranty. Okay, let's create a warranty product whose type should be service. Okay, and in the accounting tab, here the income account is provided as deferred revenue account. So inside this deferred revenue account will be added that deferred revenue model. Okay, so let's save, and here the payment is $1,000. So once a customer has been making payment for this, it will be generated as a deferred revenue. For example, warranty has been added. So the price and the taxes been updated. So it is confirmed. Okay, so you can see a deferred revenue has been generated. It shows in red color because this is in draft state. That is the deferred revenue now created, which will be in the draft stage, because in the creation automation we have been added create in draft stage. So go to deferred revenue. You can see deferred revenue has been generated in the draft method. And so you can compute the revenue by clicking on the compute revenue option. So the revenue board has been updated over here. So this is how we generate the deferred revenue from invoice. Now we'll be having the deferred expense as well. So deferred expense is also similar to this, as we are making an advance payment for something. For example, an insurance payment. If we have an insurance payment maybe for 10 or 12 years, and we make it as a prepayment. So it is actually created an expense, but it's an asset for company. So that's what we call deferred expense. So similarly, we'll be able to create deferred expense model and deferred expenses. So go to this one, insurance, where you can find the deferred expense name and the value of the amount can be added. If you want to add the amount from an expense, you can add it from here. That is, you can add it. For example, I'll be add this bill, select. So based on this bill amount, the expense has been calculated and the acquisition date. And this is a model insurance where we have a model insurance deferred expense model. Based on that, the calculation will be updated. So here it is based on 5 years, that is the depreciation will be calculated for 5 years, next 5 years, and the deferred expense account can be updated. Once we click on the compute expense, we'll be able to see the expense board of for each of the year. So you can see the expense, the total amount is split in among 5 years. And if we go to configuration and deferred expense model, you can see that model insurance. So this is the one I have been created earlier, and the number of recognition is 5 years and computation is based on no pro rata. And this is the deferred expense account and expenses and miscellaneous operation. And inside this deferred expense, will be providing the deferred expense model under the automation, where will be providing the automated deferred expense should be create and validate. So whenever an expense is created, that is deferred expense is created, it will create into running stage and the deferred expense will be automatically calculated instead of in draft state. So the model has been added. Now let's see how this works. So go to the bill and create a bill for a vendor. That is for deco edit. So for this vendor, we are making an insurance payment. So you can see that deferred expense is taken as expense account. This is because inside this product, which is a service product, we will apply the cost as 2000, and also for our accounting section, the deferred expense is provided as an expense account. Okay. So once I'm being confirming this, a deferred expense will be generated. Let's add the date and confirm. So you can see the deferred expense has been generated, which is in running stage. So you can see the deferred expense and the value and the model, all those things, and you can see the expense board is automatically calculated. So this is how the deferred expense and deferred income has been calculated. And also when you go to the journal entries, you'll be able to see the journal entries. Currently, this journal entries are not posted. You can see all the posted journal entry over here as status is posted. Currently, these are not posted, which is all are in draft state, because this will be posted on December 31st. So when I go to the journal entry, you can see all the journal entries over here. Such journal entries will be over here, and also you can just filter by posted only. So none of them are posted because we have just created it, and the date is for a future date. So the journal entries will be available over here. Then we'll move to our log dates. So log dates can be added for management closing as well as for our account period closing. So we'll have 3 log dates. One is for log date for our tax return, and next one is for journal entry, and then the one is for all users. So whenever we we have created the journal entry for the tax return, we can update the log date. So the journal entry will not be edited. Then after auditing, maybe after 3 or 6 months of the fiscal year, auditing may be done, and once the account entries are okay, you can add the journal entry date. Then later, once the physical period is completed, we will be able to add the all users log date. So under the configuration settings, we'll be having a tax return periodicity feature over here. So how often the year tax return have to be made will be decided at the initial period itself. That is, you can add the periodicity and the reminder and the journal entry. So at the account, at that particular time when you go to your tax report, you will be having an option of closing entry. So you can click on the closing entry, so it will generate the corresponding tax returns journal entry. Then we'll be having the reporting section, that is balance sheet, profit and loss. That is, Odoo provides a wide range of reporting, that is for even statement reports, audit reports, partner reports, etc. So let's move to our balance sheet. So inside our balance sheet, we'll be able to see all our assets, liabilities and equity details. And you can see under assets, there will be cash and bank accounts, receivables, current assets. And here the current assets, that is the total assets amount, will be the sum of the current assets plus non-current assets. And for liabilities, you can see the current liability, payable and non-current liability. As well as when it comes to equity, you can see unallocated earnings and retained earnings. Then also we will be able to unfold these details. So you can see the corresponding ledgers, that is which all the accounts that come under the current asset will be affected, and the amount in amount balance can be seen over here. And also, yeah, you will have the option to take the balance sheet of a particular specific date, and or we can choose it from here, that is custom date can be chosen from here, or as of the last month or last financial year, etc. And also you'll be able to compare per last period. Now provide last one period, you'll be having the comparison of 2022 and 2021 and the percentage. Then also by journal wise, I can filter data. So the journal, that is the entry from the bank journal, will be appear in the balance sheet, and also will be able to add whether it is unposted or unfold all option. So it will unfold all the account as well. And also we'll be able to take the PDF report and XLS, and also we'll be able to save the PDF or our XLS report of this particular balance sheet to our document module. Then we'll be having the next report, that is profit and loss report. So using a profit and loss report, company's income and expense can be, and its gross profit and net profit can be seen. So here also I'll be able to unfold out. So here you can see that is operating income, that is comes from the product sales account, and the cost of revenue, that is a direct expense, and the gross profit. And you can see the net profit. So gross profit will be the operating income minus the cost of revenue, and there will be other income. So here total income will be the aggregate of the other income and the operating income. And when it comes to expense, you can see the expense and depreciations, and the net profit can be seen. There is a difference between the total income and the total expense. Okay, also you'll be able to compare the same period by last year. Okay, same period by last year, also able to compare, or by previous period, or no comparison, or you can even choose a custom period. So the net profit, and there is a profit and loss report comparison for that 2 periods will be available. Also there is different invoices. Based on that in journal, you will be able to take the profit and loss report, and also you'll be able to unfold the data. And similarly, as in the balance sheet, will be also possible to save and also print the report in XLS and a PDF format. Now we'll be moving to cash flow statement. That is, the cash in and out from the company can be shown over here. That is the cash equivalents. Then the advance payments received from the customer, cash received from operating activities, advance payment made to supplier, cash paid to operating activities. These things will be updated. So for example, if I'm trying to receive an advance payment from customer, as we try to create an advance payment from customer, it has to be shown in the corresponding cash flow statement as advance received. So this is by this month. You can see the advance payment received from the customer is total 50,706. And if I try to pay some amount, so the cash received from operating activity will be updated. And also cash paid for operating activity, so cash in, cash out, and finally the cash equivalent and the closing balance will be seen over here. That is in bank, where how much outstanding receipts are there, how much outstanding payments are there. So this amount will be available in the cash flow statement. Then we'll be moving to executive summary. So this will be summarize our financial status of our company, where we'll be able to view the details of the cash we received, spend, surplus, what is the closing bank balance, the profitability details. That is as we show in the P&L report, the income, direct income, what is the gross profit, expense, net profit. Similarly, the balance sheet details like receivables, payables, and net asset, and the performance of our company and the position. So these details will be available in the executive summary. So all this, for all this reports, will be able to take the printout, and will be having some filters to compare and filter the data per date or per journal. Then we'll be having the tax report. So all the tax report, that is whenever we applied a tax in any of the sales, that will be applied over here. So let's go to our taxes, where we configured a group of taxes, that is VAT 10% says 10%. For VAT 10%, here I will be providing the tax group as VAT. Okay, separate provided a group for this one. Similarly, I'll be moving to says 10%. Here also the tax group is provided as says. Okay, now if I'm trying to apply this in my invoices, like for registered customer, I have been created an invoice, and here VAT is applied, VAT 10%. Let's save and confirm. And also I'm duplicating this, and here for the second invoice I'll be provided this. So here you can see VAT 75 and CES 75, which is over here, that will be separately applied. So let's confirm, and if we go to our reporting, that is to our tax report, you can see that is VAT 10% and CES 10% is the tax. So that's come under the sale. So each tax will be seen the amount, and its tax amount can be seen over here. Then also we'll be able to see group by option by tax and account. So it is account tax. It is first account has been shown, then tax has been shown. Then when it comes to grouping by tax, then two, it is under this tax, these accounts are affected, and for this says the product sale. So that grouping can be available. Then we have one more feature in the configuration settings, that is our cash basis. So for cash basis, it allow the tax configuration either based on payment or based on our invoice. So here I'll be providing a cash basis account. So let's create, and the account is provided as current asset. Okay. Now let's go to, as we enable the cash basis, the tax is affected either based on payment or based on invoice. So we have that provision inside the taxes when we enable this feature. So let's try to create one another tax, that is tax again at 20%. This is based on invoice. So I will put based on invoice in the bracket. And here it is 20%. Then under the advanced option, you can see it is the tax exigibility, which is either based on invoice or based on payment. So I'll be put this as based on invoice, and also I'll be duplicating this. And this is provided as based on payment, and here I'll be providing based on payment. So cash basis transition account can be added. So our cash basis account is chosen, and here let's say, now let's try to apply these two taxes in our invoices, and let's see how it reflects in our tax report. So if it is based on payment, the tax will be affected only after making the payment and how much amount they have been made payment. So based on that, the tax report will be affected. So for deco edit, if I'm trying to create an invoice for storage box with $100, and taxes taken as based on payment. Okay, so let's confirm, and I've been making payment, that is out of this 120, I'll be making only 60, that is 50% is only making, and the remaining is kept open. Okay, so it will be moving to the partial status, and here, yeah, you can see 60 is the due amount. Now let's see the report. So as you go to tax report, here moving to tax generic report, or you can see 20% will be affected based on the payment only. Okay, then if I'm trying to make another invoice for deco, were based on based on payment, that is 20%, which is 29. And let's confirm this. So the tax is based on invoice. So even I'm not making the payment, that will be affected in our tax report. So that is the amount will be affected based on the invoice. Let's go back. It is posted. So let's go back to reset to draft. The tax is based on invoice. Okay, now let's go back to our tax report. Here you can see the invoice, the tax with tax 20% has been updated. That is, this is updated based on the invoice, not on the payment. Now we will have another report, the general ledger. So inside the general ledger, you can see all the accounts that are affected in your database. That is, all the accounts having its debit and credit values and the partner and currency details and its balance and all. And when you go to the next report, trial balance, you'll be able to see the trial balance. That is the initial balance, current month's debit and credit value, and the end balance. If I try to make it also count the previous period, so you'll be able to see the initial balance and the entries of November month and the entries of December. Then comes the ending balance. So the complete balance, that is including the initial balance and each month's balance to your ending balance, will be available in the trial balance. Also, you'll be moving to general ledger from here or to journal items, and even you can annotate, that is, you can add notes using the annotate button. Then we'll be having next report, that is journal report. That is the report based on our journal. That is, we have different journal. That is sales, purchase, bank and cash journals, miscellaneous journal as well. So all the entries that added to your journal will be, you can see over it. That is, this is for customer invoice. So all the invoice, it's debit, credit, the tax and values. And also what are the taxes applied and the individual taxes and its base amount and the tax amount. So you can see for vendor bill journal as well. So this can be obtained from the journal report. And then you will have the partner ledger. So partner ledger, in the sense, you can see all the payments that has to be received or you should pay to different partners. That is both receivables and payables of your partner. So here, this is for Azure. You can see the account, both receivable and payable have been taken. So if I disable this payable, I can see all the receivables from my customer. So for Azure, it is 0, but for Gemini customer and for registered customer, the balance is 2,475. And here you can see negative balance. And when it comes to payable, you can see the payable details. Then we will have aged receivable and aged payable report. So aged payable and aged payable receivable reports are those reports that are already due. That is, it shows all the receivables and payables which are due at different payment terms, 1 to 30, 31 to 60, 61 to 90. So you can see this over here. You can see when you unfold this data, this is for current date, the due amount, and for registered customer, you can see one invoice, that is invoice number 8, which is due, that is 1 to 30 days. So if you go to this invoice view journal entry, you can see the details. and you can see its due date is number 21st. So it is already due by 16 days. So which comes under 1 to 30 days. Similarly, you will be having the aged payable, that is all those payable amount which are due. So for current date, the due amount you can see over here. And then, yeah, we'll be having invoicing analysis. So in the invoicing analysis, we'll be able to see the invoiced amount to different customers from November 2022 to December 2022. You can see that graph over here, and you can view the invoice analysis in the pivot table. That is for number, what is the untaxed total for this category, this product category, all, and for product category all saleable office furniture, what is the invoice amount to your customers. And even you can add more, that is to add your partner over here, and you can expand. So you can see from each of the customer how much amount you have that received, or that is you have invoice. So this details you will be able to get from the invoice analysis. Okay. Now we'll have unrealized currency gain or loss report. So basically, unrealized currency gain or loss report will show the unrealized currency gains when we make payment in different currency. So the balance in the foreign currency at operation rate and current date will be available. So let's see how this works. So here over, go to configuration settings, and yeah, we'll have multi-currency over here. So go to the currencies where you can see all the enable currency, and you can see different rates will be there. So for INR, for the rate have been added for 2010 is 39.22. And so if I try to create an invoice by this date or by today, this date will be taken initially, and if the currency rate is updated, there will be exchange rate difference. So that exchange difference will be recorded in the foreign exchange difference, that is loss or gain account that we have been defined under the section default account. Here we'll be defining this foreign exchange gain or loss account. So that difference will be posted to this. So let's see how it happened. So let's create a customer. Okay. Consider we'll be having a new customer, and it's an Indian customer. Yeah, it's consumer, and the tax ID can be provided as a okay. Let's say, so this is one of our new customer. So if I try to make invoice, I'll be making invoice in INR. So let's create and new customer, or I'll be making invoice in INR, and I'll be adding a product, that is storage box. So you can see the amount is in Indian rupee, that is the total is 712.75, and also the journal items you can see which is in the company currency. So after adding the details, we can confirm. Okay, so the invoice is created for the customer with a rate of 32. Now let's go to the configuration settings, and we'll have a feature that is automatic currency rate update. So as per the service provider added here, and the interval, the currency will be update its rate. So when I click on this icon on the update, the currency rate will be updated manually. Now let's go back to our currencies and let's check the currency. The last update date is current day, and here you can see the Indian rupee. The currency is updated to 82. So if I try to make invoice, that is the invoice has been generated for the new customer with an earlier amount. There is an rate of 52 or something, and if customer make the payment after updating the rate, there will be an exchange rate difference, and you will be able to see the unrealized currency gain or loss report as per today. So here you can see for account receivable, you can see the amount in foreign currency as well as at operation rate and at current rate. The rate at operation rate and current rate, and you will be able to see its difference. Then if I'm going back to the invoice where for the new customer, if I'm register the payment with INR, and let's click on the create payment. Okay, so it will be moved to in payment stage. Then we'll be moving to the journal entries where the journal entries are grouped by journal. Okay, then you will be able to see the exchange difference journal, and the exchange difference is recorded over here. That is, as the rate of the currencies increase, it will be a loss for the company. So it will be automatically updated in a foreign currency, that is foreign exchange loss account. So this is how the currency works. That is, you will be able to create invoices in multiple currency, and if there is any exchange difference, that will be recorded over here. Then depreciation schedule. So depreciation schedule is as we creating the asset management and its depreciation, we haven't posted any of the depreciation. With draft entries, you can see for the car, that is the asset car with the depreciation calculator. So its acquisition date, first depreciation, what is the method, the duration, and that value will be updated in the depreciation schedule report. Now, so we completed this part as well. Now we'll move to configuration settings. So here you can see an account import stage where you can import all your chart of accounts, and also you'll be able to review your balance as well. So for going to this, so from the overview, here you can see the chart of account option. So when you click over this, you'll be able to update your opening balances. So here you can see different accounts and its opening debit and opening credit can be updated. So this has to be done at the initial stage, that is setting your accounting period. That is when you click on the accounting period, you'll be able to update your fiscal year opening date and fiscal year ends date and the tax return periodicity. Once you click on OK, there is apply, that step will be completed. Also, you'll be able to create your bank account. So bank account can be created from here, and also you can set the default taxes for your sales and purchases. And the next step is adding the opening balance. So once you open this, you'll be able to add your opening balances. So for example, if I'm adding that in the test account, I'll be adding credit amount as 5,000, and for receivables, if it is again 6,000, and in bank I'll be having some amount like 2,000. Then as a cash I'll be having again $1,000. Okay, let's save. So the opening debit and credit has been added. So you can see here, that is the chart of account is set and you have entered. So when you go to your journal entries and in the miscellaneous journal entry, there will be a journal entry that is with reference opening balance. So a draft journal entry for opening journal entry has been updated. As you can see, whatever the opening debit and credit amount we have been entered, that will be updated over here. That is for the test account is 5,000 credit, and for account receivable, bank and cash we have updated. So in order to post a journal entry, the both sides should be equal. So basically here it is 5,000 in the credit side, and in the left side it is 9,000. So there is a difference of 4,000 between, so that will be automatically added as an automatic balance line. That difference will be updated as 4,000. Actually this will be posted to our 999 account that Odoo provide for adding all the undistributed profit or loss, that is unrealized amount will be posted to this. Okay, then you can post. So in which accounting date you need to post the opening journal, that is opening balance, that you can add over here. You can raise it to draft, and maybe if it is by this physical year starting, maybe by January 1st, you can also post it to that particular date. So in the balance sheet, when you're looking for yeah, custom, okay, I'll be adding it to January 1st date as provided as end date. So you can see the bank cash account receivable amount is affected, and some other entries are also there. Also, you'll be able to see that unrealized amount is 9,000 that have been added. So they are the opening balance. So when you go to its journal general ledger, you can see that amount is shown as the it is that particular amount will be shown as the opening balance. Let's go back to general ledger. So they should be having a label called journal opening journal entry. So okay, opening journal entry, which is posted to 2021 actually. Okay, so I'm reset this to draft and 2022 January 1st. Okay, so we have provided an opening journal entry date over here. So go to general ledger again. So this is I'll be taking it from January 1st and apply. So you can see some more entries are being added. So this is a miscellaneous journal entry for our test account, which is the opening balance we have been added. Also here one more miscellaneous for receivable, which is 6,000. You can see that for each of the account it will be provided as the miscellaneous journal entry in the general ledger. Then we'll be having, let's go to settings. Yeah, we'll be having the option to add default taxes and tax periodicity, that's we have already discussed, and we'll be having an option of rounding method, that is rounding can be applied round per line of round globally. So cash rounding can be applied, that is in the configuration, in the other info of your invoice you'll be able to add the cash rounding. And cash discount tax reduction, so we have been seen in on early payment, it can be either never or always upon invoice. So it will define, that is when will the tax to be reduced when offering a cash discount on the invoice. Then we have been discussed other features. So fiscal country. So fiscal country is the domestic country of your accounting. As you create your company, the information you have provided in the company, like which country it belongs to, that will be the default physical country. And yeah, you will be having the customer address, so you'll be able to add here a specific delivery address on your invoice, and you will be also able to set warnings for your customers by adding the warnings, that is you will be able to warn or your block your customers while creating the invoices. And we'll be having the cash rounding, so we'll be able to create cash roundings, and default Incoterms can be updated. So in your invoice, this default Incoterm will be appear. Also, when it comes to default terms and condition, you can provide default terms and condition on your invoices and quotation. So here you can insert the terms and conditions. Suppose I'll be provided as TNC, or you can even add a web page link as well. And there will be a sales receipt option. And this is another feature, that is sales credit limit, which is new in 16, where we can define a particular amount. For example, if I'll be provided as 5,000 as the default credit limit, so it triggers an alert when creating invoices for your partners. So those have exceeding this limit will show an alert. So let's say this, and go to your invoices. Okay, so if you are trying to create a customer, here you will be able to see an delivery address as well. This is a customer address, and in the other info you can see the Incoterm, which is the default Incoterm, and also you will be able to add the cash rounding and physical positions over here. And in the invoice line, I'll be adding one product. Okay, so the amount is, you can see over here, and the terms and condition can be appear over here. So for this customer, in the partner form, you can see the due amount. So the invoiced amount is and the due amount you can see over here. Okay, so here's this one. So let's try to choose another customer, which is Azure. So here also he'll be having invoiced amount only. Okay, suppose for consider that he have a payment of 10,000. Okay, so here you can see that is the Azure has reached its credit limit 5,000. So total amount due you can see over here. So this warning will be appear for your customer if the credit limit exceeds the 5,000. So this is one of the new feature in Odoo, and will be having that physical position, that is, let's say this, and having the physical position, so which is created for United Kingdom, that is if product is applied with 15% tax, it will be mapped to VAT 10% tax. So in the invoices, we can see if Azure is trying to purchase acoustic block screen, you can see the tax taken as tax 15%. That is the tax that we added as 15% itself. Now, if you change the customer to a demo customer, which is from United Kingdom, and the product, go to the invoice line. Let's remove this and choose acoustic block screen. So you can see VAT 10% is mapped, and also the account is mapped from product sales to other income. So in the other info, you can see that physical position is automatically taken as United Kingdom. So this account mapping and the tax mapping have been done with the use of this physical positions. Then we'll move to settings. Let's see what are the other features. Okay, then we will have batch payment. So payments can be sent in batches for reconciliation process, and there is sale purchase receipt in order to create purchase receipt for vendor, and yeah, this is a check payment. So as we are making check payments, we'll be having an option to make check payments and print the check. So for that purpose, we have to enable the check. And under digitalization, there is document digitalization. We can digitalize our bills and customer invoices. That is, if you have your physical bill or invoices, you can upload the document to Odoo, and as you are uploading, if you have enough credits for digitalization, that is details from the bill or from the invoices will be automatically taken to your bill or invoice that have been created in Odoo. So here, as you enable the sales receipt and purchase receipt, you can see the receipt option under invoices. So you can create receipt for your customer. So this is similar to your invoice, but both documents are different. That is, invoice will be a valid document that can be used for tax return and all. At the same time, the receipt can be used as a document that can be provided to your customer. So the fields are same as that of in the invoices as well. So go to products, and you can add the product and its account, that is the input account, sorry, the income account, and the quantity, the price, what is the customer tax provider, all those will be updated. And let's confirm the receipt, and also add the register payment option in order to register the payment. So this document can be provided to your customer as a receipt, so which will be similar to your accounting invoice. And also we'll be having the purchase receipt in the configuration settings. When you go to configuration settings, you will be having purchase receipt as well, that is under Yeah, under vendor bills, you'll be having the purchase receipt. So once you enable this option, it will show the purchase receipt, that is a receipt under bills as well. That is purchase receipt can be provided to vendors, and you can enable the predict vendor bill. So the system will try to predict the accounts on vendor lines, that is vendor bill lines, based on the history of previous bills. Then we'll move to another feature, that is our budget management and analytic accounting. So let's save the budget management and analytic accounting. And on saving this, under the accounting, we will have budget management as well as a budgetary position under the configuration settings. So let's save the settings. Okay. Now go to accounting. And go to budgets. So here you can create a budget for a particular project or a particular duration or even a yearly budget as well. So I'll be creating a budget for December 2022. The responsible person is the login person, that is Michelle admin, and you can also add the budgetary position. Inside this budgetary position, actually will define all the accounts for our budget. So consider a budgetary position revenue, where we'll add all our revenue accounts. So just click on add a line and filter account by income. And you can choose all the income account that belongs to income type and other income and select. So this will be added to your budgetary position. So the budget must at least have one account, and here the start date and end date of the budget, that is the period we have been updated in the budget, that will be auto populated. And when you go to the plan amount, it's a 10,000 amount will be added as a planned budget. So I'll be planning to earn revenue of 10,000 between this period. And there will be a practical amount and a theoretical amount. Practical amount is the amount that I have been earned, and theoretical amount is the amount that I have been that is I'm supposed to be earned. So let's save this. So this is for revenue, and you'll be able to create the budgetary position from configuration settings. Here budgetary position will be the under configuration menu. So go to the budgetary position. So here I'll be creating another budgetary position as cost and add all the expense account. So filter by expense account and choose the expense account, including depreciation and COGS account. So let's save. So the cost budgetary position can be added into our budgets. So go to the budget and add the budgetary line, that is the cost over here. And the cost I'm supposed to be plan is $1,000. And let's save the data. So you'll be able to see whatever the cost have been generated as a practical amount, and this is the amount that is supposed to be earned. So this will be calculated as the planned amount divided by the number of days in that period, multiplied by the starting date to till date, how many days are there. So we'll be multiplying that number of days. Then we'll be able to see all the entries of this revenue generated by clicking on the entry. So you can see all the journal entries, that is from different invoices the entries have been generated. in as a credit amount. And the achievement, which is the percentage, where you can see which that is 105.45 percentage as the revenue achievement, which is the ratio between the practical amount and theoretical amount. So when I'm confirming this budget, it will be moved to confirm, and based on the achievement that is in between this period, I'll be creating different transactions. So based on the transaction, whatever the amount I've been practically achieved and what is the achievement. So based on this achievement, I'll be able to decide whether I need to continue with this budget or I need to cancel this budget. Then we will move to analytic accounting. So analytic accounting is used to track the individual records that has been distributed along the projects, different departments as well. So while you enable the analytic accounting, you can have this analytic distribution model, analytic accounts and plan. So when you go to analytic plans, you can see the analytic plans, whether it is departments, project or internal. So we'll be able to create new analytic plans from here. For example, articles, and its default applicability can be applied. This is by optional. And also if we apply it on particular domain, that is on invoice, vendor bill or purchase order or sale order, we can add its applicability is whether optional or mandatory or unavailable. So I'll be just leaving this, and you can also add the parent plan, that is analytic plan for this. So I'll be creating just one plan as article, and also creating an analytic account. So these are the different analytic accounts existing in my database, and I'll be creating one analytic account for which is article 1, and it comes under the plan articles, and here I can add the budget lines, or I can add the some distribution rules in the analytic item, let's say. And also I'll be going to this distribution model. So I can create a distribution model where I'll be setting certain conditions. So if I'm selling a product, for example, if I'm creating an invoice to a partner deco for a particular product or a particular product category, or some accounts involving a certain prefix and partner category. So whenever this condition meets, we'll be able to apply certain distribution, analytic distribution. So if it is partner is deco for article 1, that is I'll be adding this percentage as 10%, and let's say, and I'll be creating another more accounts for that is article 2, which is also under articles, let's say, and one more which is R&D, which is under the project. So I can add the default distribution, that is, and that is for article 1, this is 10%. For article 2, I can add that is 50%, and maybe remaining 40% I can add to R&D. So 40% can be added over here. So you can say article 1 10%, 2 to 50% in R&D to 40%. So let's save. So let's see how this works. So whenever the condition meets, this condition meets for an invoice. So as I'm creating an invoice for deco, and when I'm going to add a line, you can see that analytic distribution will be automatically updated, and whatever the product I have been choose, whether it is a material or a service product, so the distribution will be updated. If it is for customizable test, okay, I'll not be applying the tax. So 750 is the total amount, so 40% will be to R&D, 10% to article 1, and 50% to article 2. So let's confirm this and register the payment. Okay. Now let's go to our analytic accounts, where you can see for article 1 it will be affected as 75, and article 2 there is 50%, which is 375, and we'll be having one more account, that is R&D, where you can find 300 will be added. So that distribution is being added to the account, and when I'm going to budget as well, for our budget, we'll be able to add the analytic account over here. So let's cancel the budget, and I'll be resetting to draft. For revenues, I can add to maybe to article 1 and post to article 2 as well. So whatever the revenue generator will be distributed to article 1, and whatever the revenue has been generated, that will be updated to article 2. So let's go back to our first confirm this, confirm, and go to analytic account, where you can see that is 75 and 375 is the balance. So if I'm trying to make a revenue, for example, we'll be creating for deco itself, and maybe the payment is 1000. Okay, so I'll be just remove this. Okay, I'll be added as 10% to article 1 and 50% to article 2. I can even save this template. So when I click on the save option, I'll be able to save this template, and furthermore connections or furthermore conditions can be added. So I'll not be adding any conditions. So by default, this will be the analytic distribution. So let's save and close. Okay, and let's confirm and register the payment. Okay, now there is 10% will be affected in article 1 and 50%. So basically they will be affected in the practical amount of our budget as well. So let's, yeah, it's been over this year. So I'll be moving back to the analytic account, or you can find when you go to the article 1. Okay, there will be two invoices. One is from this 1000 and one is from this 750, and the gross margin as well for December. There is 6 entries are there, so that you can see all the entries over here. And similarly for the article 2 as well, the 2 entries, one is from the first invoice and the second invoice, and the total amount is to change to 875, that is a gross margin, and also you can see that will be affected in the this particular budget as well. So you can connect this analytic account and budget as well, and we'll move to some features like, yeah, that is invoice online payment. That is, customers can pay their invoices in online. For that, we have to configure the payment acquires, and this is for bank and cash. That is, in order to import the statement, so Odoo supports this format: CSV, IFX, CMAT, and QAF. So we have to enable these features over here, and also we'll be able to add an invoicing switch threshold, and we'll be having an option to add the margin analysis, so a product margin can be obtained. Yeah, one of the another new feature is store no accounting. So it is also known as red accounting, where it shows all the negative and debits and credits in red color. Usually the bookkeepers will record this negative entries in red color, that is the negative credits. So let's save, and if you go to your accounting report side, whether it is any report, that is profit and loss or balance sheet and all, you'll be able to see that red marking for, and go to the general ledger. Yeah, here you can see the negative balances shown in the red color. So this is also new in Odoo 16, the new feature. And when we go to payment providers, we'll be having different payment providers. So the Asia Pay, Amazon Payment Services, Flutterway, RezoPay, and Mercado Pago. This is all. These are new payment methods or new payment providers that Odoo provides in 16. So we'll be having this demo to make our demo payment for our invoices. So you can activate the payment providers by clicking on the install option on this tile. So once it is installed, you will be able to configure the settings. So when you go to this demo one, you'll be having certain configuration, that is, it should provide in the test mode, that is, the state should be moved to test mode. And here you can add a name of the provider that will be displayed in the payment form. So demo payment provider, and also you'll be able to add the supported icon. And if you want to save your payment details, you can enable this, and if you want to capture the payment amount manually, so you can enable. And this is a journal for which this payment have to be recorded. So you can either create a separate journal for each of the payment provider, or you can add it, and you can add the maximum amount over here. So the maximum amount, that is this payment method can used. So let's publish this and go back. Also, when you go to install this Flutterway, and not this one, for every payment provider there will be certain configuration, that is, you will certain API keys and all, some password and all have to be configured. Okay, so when you open this, here you can see some credentials like public key, secret key, and webhook secret key will be required, and the other configuration will be the same. So for this one, supported payment icons will be already shown, and you can also configure like the payment message. Once the payment has been completed, what will be the done message, the pending message once that has been successfully processed, like but it is waiting for approval. So pending message can be added, or even the cancel message. Once the payment has been cancelled, what should be the payment cancel message has to be shown, and also help message. So this can be, you can configure. So this configuration will similar to all of them. So let's go to one of the invoices, and so therefore okay, so here for the demo customer, and invoice has been created, which is $295. So once it is confirmed, and if this customer have require analytic distribution, so I'll be adding one analytic distribution. Okay, so here once you confirm, if this customer have an portal account, they can log into portal and they can see their documents like their sale orders, quotations, or other invoices, etc. And from the invoice, they can make payment. That is, when you click on the preview, you can see that portal view of your invoices, where there will be an button that is to pay. So once you click on this, you'll be having a pay now option. So the customer can click on this and make payment through the acquirer. Okay. So this is an invoice where all the details can be seen, and also click on the pay now option where you can see the demo payment provider, and the test card data can be added. That is, if you want to save the payment details, you can mark it as save. So let's pay. So it will be shown like the payment has been done. So we have discussed Odoo 16 accounting application and its new features. So if you have any questions or queries, please add your comments in the chat box. Q&A session will begin in few minutes.